you guys please confirm if the audio and the video part is clear? I was not saying anything. I was not saying anything. I was just waiting for you guys to join in. Okay, I need the confirmation from you guys if the audio part, the video part is clear. Yeah, okay. It's slow but better. I was intentionally speaking a little bit slow. It's slow but better. Sounds like you're far away from the mic. No, I'm not. Okay, I guess we should start the live stream and then we should see how it goes because the just like I mentioned earlier, Discord has some sort of issue, so I would be continuing the live stream on YouTube. At least the audio is better here, right? It's a little bit slow, but it should be better here. All right, so let's start the live stream once again. Good morning, good evening, good afternoon for those of you who are joining us from YouTube. Um, we were talking about the long trade we had open, at 69,300. We took a full TP at around 70,150, and I was pointing out to the fact that this was basically the 50% of the imbalance, where exactly we took a full TP on opposition. And the second important reasoning that we were talking about, the first one was obviously the importance of 50% levels and Fibonacci, in terms of Fibonacci levels ratio, in terms of order blocks, in terms of fair value gaps, imbalances. And another important thing I wanted to point out is that if you would look at this long position, what was the reason for not continuing with this long position? The major reason was, we have the CPI numbers getting released tomorrow, the first one. And the second one is that we are going to have a decision on rate cuts or rate hikes on 13th of June. And, in my personal opinion, there is no reason for market makers or institutions to pump just as of now, to make the market pump just as of now, just 24 hours before the CPI data. And we would be talking a little bit more about the CPI numbers because it's such an important thing. How the price has been reacting to, how the price for BTC has been reacting to the CPI numbers. First of all, if you would look at all of this in context of what exactly has been happening with the inflow into these spot ETFs. Now, the reason I'm mentioning the spot ETFs is obviously, if you are somebody who is just a big fan of technical analysis, you would say that every single move that is happening on the chart, I would be able to find the reasoning right in front of me on the chart, right? I need not to look at the fundamentals. But the truth of the matter right here is that, you know, if you would compare, ever since the ETFs got approved back on 10th of January, if you would compare, the price action for BTC and the inflow numbers for these spot ETFs side by side, you would realize that the price action for BTC, it has been extremely sensitive to the inflow into these spot ETFs. I don't really want to get into the details of that, but if we quickly take a look at the timeline, ETFs get approved on 10th of January. we saw a small inflow into these spot ETFs, price jumps to 49,000. Then we saw the massive selling happening from grayscale spot ETF, price goes down to 38,000. Then the inflow into these spot ETFs, the inflow into the BlackRock spot ETF and Fidelity and the rest of these big institutions, it simply just outnumbered the outflow from grayscale spot ETF. Once again, price goes to 50,000, and now the 50,000 mark, it's an extremely important number. It's an extremely important number since the only pullback that we saw happening from 38,000 all the way up to 60,000, 66,000, it was at 50,000 when price went from 51,000, 52,000 to slightly down to 47,000, 46,000. I don't exactly remember the dates. Possibly it was 13th of February or 14th of February. But at that time, the pullback was mainly because the CPI numbers, they were bearish. The inflation numbers, they were higher than expected, and for that reason, price did this small pullback. It was not really a very small pullback, but if you would compare it, if you would compare that retracement wave with the other, the impulsive waves, you would realize that the pullback, it was merely down to only 23% Fibonacci levels or maybe 38.2% Fib levels, which means that, whenever we are talking about the Fib levels, we always say that whenever the pullback is above the 50% levels in an uptrend, this usually indicates that this trend it is extremely strong. But if the if the pullback is below 50% levels in an uptrend, for example, down to 61.8 or maybe down to 70.5 or 78.6, a deeper pullback, we usually say the trend it's not really a stronger one. Okay, so one thing I wanted your attention to bring towards is that the pullback that we saw happening from 51,000, 52,000 down to 47,000, it was because of the inflation numbers higher than expected. So you can imagine that, and you can imagine that the price action for BTC, it has been extremely sensitive to the inflation numbers, not directly related to the inflation numbers, but actually related to the inflow into these spot ETFs. Now, all of these things, they are absolutely interconnected with each other. Obviously, when the inflation is higher, when the inflation numbers are higher than expected, people are less likely to be investing into these, into these risky assets, into these risk assets. And similar is the case with the institutions as well. Giving you guys a start, I was looking at the if we look at all of these global spot ETFs, recently Hong Kong also approved the spot ETF for Ethereum and for BTC as well. If you would compare the spot ETFs approved by US and the rest of the regions, you would realize that the capital that has inflowed into these spot ETFs has been coming, 90% of that has been coming from US. Okay, so obviously whatever policies are being made in US, whatever the inflation numbers, whatever the interest rates are going to be in US, obviously it's going to have a massive impact on how the price is going to react in the upcoming few days, upcoming few weeks, or upcoming few months. Okay, so this week it's a very important one in my opinion, and there is no reason for you, although we do have a long position open in BTC, we just opened it, but it's a risky one in my opinion, and you might see price simply just consolidating in the next few hours. We are sitting right here on the demand zone, we are sitting right here on this very important support area, and a very important reason, a very major reason for taking this long trade. I always say this thing, when price was trading back at 59,000, 58,000, I was always encouraging people to be to be interested in buying at that spot. The reason for that was because you are closer to the invalidation point. We would be talking about the importance of buying at 57,000, 59,000 also. But in this situation as well, if we talk a little bit about the chart part, we will be talking about in detail just in a little bit. But just to give you guys an idea, the invalidation for this whole bullish structure is simply at 65,800 or $66,000 region. So if we get a 4-hour candle close below 66,000 or below 65,800, then obviously the whole structure, the whole bullish structure, it's simply going to be shifted from being bullish to being bearish. And that is exactly the reason why I'm willing to take the risk, although it's a very risky bet, I would say. The reason once again for this is because we are just 24 hours away, just 24 to 48 hours away from these two very important decisions. First one is on interest rates, And the second one obviously is about the CPI numbers. You cannot predict, you cannot really say what the data is going to be looking like. But I'm a big advocate of the fact that any sort of information that you would require regarding a particular financial asset, a particular financial instrument, it's right there in front of you in the chart. Now I know it's a very important statement, and not many people like to say this thing that whenever the fundamental news, whenever there is some sort of fundamental news, technicals is simply just go out of the park. Technicals for technical analysis simply has no importance in front of fundamentals. But still, it's a bit of a controversial statement. I always say this thing that I'm a big advocate of the fact that the information that you would require regarding any particular financial instrument, it's right there, present right there in front of you in the chart. It's all about looking at the right place, right? It's all about counting the right variables. It's all about paying attention to the right variables. Okay, so we would be talking about the chart part also, but the this is obviously a very important week, and ideally speaking, theoretically speaking, you should be staying on the sidelines, and that's what the most of the majority of the institutions they're going to be doing, because they're definitely going to be looking at the inflation numbers. Obviously, if the inflation numbers they're higher than expected, past 2 to 3 months we have been seeing that inflation numbers they were higher than expected. And just to give you an idea, if the inflation numbers are higher than expected, obviously these big institutions who have been massively investing into these spot ETFs, they would be a little bit reluctant to do so, and you would see some sort of outflow from these spot ETFs, and that's why you would see price declining as well. If you would look at this current wave, 20th of May, I do remember when we were doing the live stream, almost like 2 to 3 weeks ago. I went to vacations, and before that, price was actually trading under 67,200. At that time, I did mention that if we happen to have a candle close, a 4 hour candle close above 67,200, the whole bearish structure, it's simply just going to shift towards a bullish structure, right? At that time, the inflow into these spot ETFs, it was not really significant. But for the past 17 to 18 days, if you look at this one complete wave, you would realize that if you would compare the spot ETF numbers and this price action for BTC, you would realize that for the past 17 to 18 days there has been a massive inflow into these spot ETFs. There has been a complicated side to it as well. For example, just during the last 24 to 48 hours we have seen a massive inflow into these spot ETFs. But despite this fact, we have seen the price for BTC declining, because the investors, they at one point are investing into these spot ETFs, but at the other point they're also selling. The outflow, it has been significant. I'm not going to get into the technical details of that, because that might sound a little bit complicated for some people. But the point here is that price has not been directly been being impacted by the inflation numbers, but actually the inflow into these spot ETFs, it has been a very significant factor. And the investors, these institutions, they're obviously going to be looking at what the decision on interest rates is going to be on 13th of June, and what the inflation numbers are going to look like tomorrow. And based on that, you would see where price is going to be moving. In my personal opinion, it's a good spot to buy, because we are literally just sitting on the demand zone. Although I would like to point out towards the fact that the best possible spot to buy was this opportunity right here on 24th of May, or back on 1st of June. The first retest, or the first tap of a level is always a single best opportunity to invest. It could be a short trade, or it could be a long trade as well. But this was a first best opportunity. This was a second one, and I'm not really a big fan of buying or selling at the levels and prices hitting into that area over and over again, because over the time these levels just simply just get weaker. Okay, this is a sort of fundamental rule for me. So in this situation as well, if you would look at the waves right here, you would realize that okay, the structure right here, it was simply just bearish. We get a 4 hour candle close above 67,200. The structure simply shifts from being bearish to being bullish. You had this impulsive wave, and then you had this very small corrective wave. Now whenever you get these smaller corrective waves, that's where I need your attention. I just pointed out to you that the the lengths of these retracement waves, they're extremely important. A lot many people are always talking about the Fibonacci numbers and the Fibonacci retracement levels, but they simply just do not understand the importance of these levels and why exactly they are being used. As the name suggests, the Fibonacci retracement levels, they're simply just there to give you guys an idea, to give you guys a prediction, a forecast about the length of the retracement waves. And they looking just by looking at the lengths of these retracement waves, just by looking at these levels, you can simply just tell a lot about the price action. So in this situation, you can see that this was your impulsive wave and this was your retracement wave, and as soon as price broke above the previous high, this is simply break of structure, meaning this uptrend is simply just going to continue for a small period of time. That's what the break of structure is signifying. But this smaller pullback actually was indicating that there is going to be a massive impulsive wave towards the upside. Simply put, because this was a very small retracement wave, this was a very smaller pullback, and that's how you get an idea that the price, the next impulsive wave, the price is going to be volatile in one direction, and the next impulsive wave, it's going to be a massive bump. So massive bump. So you have an impulsive wave, you have a retracement wave, then you have another impulsive wave, and this was a very important spot right here, because ideally, we failed to get you. We actually failed to have a candle close above the 72,000 mark. Okay, that was a really that was a really unfortunate event in my opinion, because a 4 hour candle close above 72,000 would have absolutely marked the fact that okay, we are going to continue with this uptrend, and most probably we are going to break above 73,000, 74,000, the previous all-time high. But we were not able to break above the 72,000 mark, and now the invalidation point simply just stays below this low. Just to give you guys an idea about about the theoretical schematic that we are looking at. And by the way, I always discourage people, going against the trend. This short trade was simply an exception. Okay, this short trade was simply just based upon some sort of information. I'm not going to get into once again the details of that. All of that has already been discussed in our Discord channel. If you're not a part of it, please make sure to join in. Join in the premium channel, and you would have the real-time market updates and everything. But the this short trade, it was simply just going against the trend, and I'm always encouraging these type of short trades. We had another long trade for the premium members, taking some, we took that long trade at 69,300 and took a full TP at 70,150. I have already explained the reasonings for doing so, but just to give you guys an idea in terms of theoretical schematic. Let's suppose that you are moving in a downtrend. Okay, you're moving in a downtrend, and that's where you actually get a change of character, market structure shift. Now what exactly are you going to do? You're simply just going to be waiting for price to give you a pullback down to these levels. If I have to summarize my complete strategy, one part of my strategy in 3 to 4 sentences, how would I actually do that? Okay, how could you have taken a very beautiful long position right there? I was gone for vacation, so I was not able to drop an idea for this, but I do remember sharing an inverse head and shoulder chart pattern with you guys, saying that okay, 67,800, it's a very good spot to buy, and then price went on to $72,000 region. Anyways, if we look at this theoretical schematic, as you can see, price is continuously moving in a downtrend, making lower lows and lower highs. At some point, price, instead of creating a lower high, price simply just breaks above the previous high, prints a higher, prints a higher low. And in that situation, what you would do is that, using, Fibonacci levels, we already had a discussion on that as well during the previous live streams. Many people have different ways of locating the demand supply zones. For me, for some people, it's by using the order blocks. For some people, it's by simply looking at the consolidation ranges, and some people like me, for some simple people like me, it's always the fib level. So I would usually draw my demand supply zones using the fib level. So what you would do is that, looking at these two anchor points, looking at these two obvious anchor points, and in that situation, these anchor points would have been this one, this low right here, and this high right here. You would have drawn the demand zone, and as soon as price would return back to that demand zone, what you would do is that you would shift to the smaller time frame. That's basically a top-down approach, multi-time frame analysis. You would move to the 15-minute time frame chart. you would once again on the 15-minute time frame chart wait for a change of character, market structure shift from being, wait for market to shift from being bearish to being bullish, and once again, you would draw another demand zone on the 15-minute time frame chart. Once again, wait for price to pull back to that demand zone, and as soon as this would happen, you would finally move to the 5-minute time frame chart, repeat the same exact procedure, and finally, when the change of character happens on the 5-minute time frame chart, you would try to take a long trade, placing your stop loss below this low area right here, because that's where your invalidation point is going to be, and that's what exactly we are doing right here as well. Although a stop loss is a little bit higher, I would explain the reasonings later for doing so. That was mainly just to give you guys an idea. That was mainly because if you would draw fib levels from this swing low to this swing high, I mainly wanted to cover some of the dynamic lines. I mainly wanted to cover the 88.6 level as well, and that's why my stop loss in this situation is a little bit lower. But ideally, your invalidation point for this long, it would be below this low area, below 65,800. So if you get a candle close below 65,800, you ideally should not be staying in that long position, because the whole market structure, it would be shifted from being, once again, from being bullish to being bearish. But once again, I'm a little bit optimistic about this long position. You cannot really say anything. Obviously, looking at the charts, you would say that we are sitting on the demand zone, the invalidation point, it's a little bit close. Some of the dynamic lines, they are present around in this region. If you would draw the fib levels, if you would draw the fib ratios, some of the important fib levels are also aligning in this region right here. But if you would talk about this very important week, if you would talk about what the numbers could possibly look like, I'm not very optimistic about that, because if once again the inflation numbers, even there, if they're slightly higher than expected inflation numbers, then in that situation, we could simply just break below this very important support area. And uh, this is basically just a quick general market update. We have already closed this short position, and now we are continuing forward with this long position right here. Now, a lot many of you are actually concerned about what market could do in the upcoming few weeks or upcoming few months. Are we going back to 50K? Are we, was this actually the local top? We already had a discussion a few live streams ago. We had a complete discussion about where exactly the new top for this cycle could be. The worst case scenario, in my opinion, even in the worst case scenario, it's going to be at around $80,000 to $85,000. But in the best case scenario, in my opinion, it's going to be around 120,000 to 130,000. And we did not really establish this thing, by simply just saying that, okay, the new cycle top, it could be at 120,000, or like at around 85,000. We looked at the previous fractals, we look at the historical data, and then we establish this fact that, okay, the worst case scenario, the worst case situation, the fractal that we have, the most recent fractals are pointing out towards 90% of the fractals. If you would look at the fractals that are almost 2 years old, or even the most recent ones, they're pointing at a major correction from 80,000 to 85,000. So it's a definite thing, in my opinion, that I would be closing majority of my long positions, majority of my spot positions at around $80,000, because price most likely is going to have a pullback from that region. What possibly could be happening as soon as we would break above the previous all-time high from above 73,800. Now, this is a very important question, because there is a very common misconception among people also, that as soon as we would break above 73,800, price is straight away going to go up to $80,000 region. But hear me out, carefully, because I'm giving you guys, I'm actually going to give you guys a very alternate point of view, of what possibly could be happening as soon as we would break above the $73,800 region. Now, if you have been watching some of my previous live streams, like 4 to 5 weeks ago, we were talking about range trading, right? Obviously, if you would ask some other people about how would they actually be trading a range, they might have different answers to what they possibly might be doing with the ranges. Every single person has a different strategy, in every single situation. But the most common way that you can actually trade a range is by simply waiting for a sweep of the range low or the sweep of the range high. We already had a complete discussion on that like 4 to 5 live streams ago, but just to give you guys a quick recap of how exactly it's going to look like. For example, we are obviously moving in this range, right? So let's say that this is a range we are looking at. This is a range that we established. This is obviously a range higher, the previous all-time high, and this is a range low. Price has been continuously consolidating in between this range. This would become a lot more clearer if you would look on the daily time frame chart, because there was some sort of consolidation taking place on the 4 hour time frame chart. But since it's a very big range, so ideally we should be looking on the daily time frame chart. And apologies for this. The chart is literally looking like a mess, but I would be quick in explaining what do exactly mean by this. Okay, so let's say that this is your range high and your range low is somewhere around here. Okay, so the simplest possible way that you can actually trade this range, and what possibly could be happening as soon as we would break above the previous all-time high at 73,800. I would be explaining that part. uh, in this situation, you can see that this was your range high. Let's suppose this was your range low. The simplest possible way that you can trade a range is buying low, buying at the bottom of the range and selling at the top of the range. And another very important strategy, another very common strategy that people use is that they would wait for a range to be formed, and then they would identify a range high and then identify a range low, and then they would simply just wait for the sweep of range low or range high. Okay, so let's suppose in this situation price breaks below the range low, and a lot many people, they were actually panicking at that time. I was continuously saying that 56,000, 57,000, these are very important regions. Even if you would look at the Fibonacci levels, even if you would look at the some of the other confluences also, these are very important levels to be buying at, and there was no need to panic. Even if you would look on the daily time frame chart, you would say that okay, price breaks below this range low area, and it did not consolidate below this range low. And by consolidation, I mean to say that if price literally did not stay below that region on the daily time frame chart, we had price breaking below this range low, and then quickly we had a buyback happening. We had quickly price moving back into this range, then went back to give a nice retest at this range low. And what you would do in this situation, wait for the price to break below the range low, and then wait for price to quickly come back into this range and give a nice retest at the range low. And that's where ideally you should be buying. Okay, place your stop below this range, place your stop below this low area right here, and then your first target is going to be the mid range, and then your second target or your final TP is going to be the top of the top of the range. Okay, that's the simplest possible way. The range high is going to be second TP. That's probably the simplest possible way. That's the simplest possible strategy that you can use in terms of range trading. Okay, so now similar is the case with the range high as well. That's where things get a little bit tricky, since a lot many people, they're anticipating the price would just break above 73,800, we would straight away go to 80k, 100k. But that may not really happen. That may just be a trigger for a very big short position. I would really like to call it a big short. Okay, although the chances of this happening are only maybe 40%, but still, that possibly could be happening. So what would happen in this situation? uh, you know Price would just break above the range high, and it's not really going to consolidate above, and then immediately, when a lot many people, they would be buying at that spot, price would immediately fall back into this range. There would be an immediate sell off taking place, because a lot many people, they would be selling their positions, and then you would see a retracement happening back to this range high, and then that's where you would actually be taking a short position. Your first TP, it's going to be at the mid range, and your second TP, your final TP, it's going to be at this range low. Okay, so you would be taking a short position exactly at this spot, and you would be placing your stop above this range high. Okay, and then you would be targeting this mid range, and then finally this range low area right here. Obviously, the chances of this happening are only 40%, and the 60% chances of that, we would simply just break above the range high, and we would straight away go to the $80,000 region. And that's an extremely likely situation also, because we all would agree over the fact that we are moving in this range, which is basically not just a consolidation range, but actually an accumulation range also. So smart money institutions, they are simply just accumulating, they're simply just making you bored, they're simply just testing your patience. A lot many people, including myself as well to some extent, are getting fed up with this range, are scalping this range. But if you have been holding your bags for quite some time, if you actually had it buying from at 59,000 or 61,000, 62,000, and you're looking to be selling at 71,000, 72,000, and you would like to keep on doing that, at one point price would simply just break above 73,800, and you would literally not have any sort of pullback, and you would straight away go to 80,000. Because what do you think? Market makers, they're testing their patience. They would break above 73,000, give you a nice pullback down to 73,000 once again, and then pump the price to 80,000. No, that's sadly not going to happen. Either it's a big short, or either it's straight away move to $80,000 region. Obviously, based upon what sort of confidences you have at that point, you can make the best possible decision. But yeah, in my opinion, that's what's going to happen. And this 73,000, 72,000 region, it's going to be an extremely important region, because in the upcoming few months, in the upcoming few weeks, that's where you would establish a major support area. It's a similar sort of thing that we established at $38,000, price. I was doing live streams back in those days, and every single week I would say that, okay, price is simply just rejecting off 38K resistance area. It was really the same sort of situation. Every single week you would do the live stream and you would say, okay, the rejection is happening from 38K. But when we broke above, the first thing was we had a very massive break. We had a very impulsive break above 38K resistance area back exactly like 4 to 5 months ago. And then that 38K region, the 38K level acted as a very strong support. At that time, a lot many people, including me also, we were expecting the price to go back to 34K, but it did not happen. 38K, it acted as a very strong support area. Okay, so in this situation also, as soon as price would break above, consolidate, this 72, 73K region, it's going to be acting as a very strong support for the upcoming few months, upcoming few weeks, or possibly upcoming few years also. Okay, so that's it for the complete general market update. If you guys have any specific questions to the things that we have discussed so far, please make sure to ask. The next few live streams, they're going to be happening on YouTube, because I'm actually fed up with Discord. The Okay, I hope the stream quality was better this time. Just like I mentioned earlier, also, on YouTube, it's always perfect. Once again, so sorry, boys, the chart literally has been looking like a mess. I think there is a small delay in the live stream. So if you guys are able to hear me, please make sure to ask any questions. Would love to know your thoughts on ETH as well. Okay, so if you're not a part of Discord, please make sure to just join in, and you would find an update on ETH as well. Okay. I had a complete write up on the ETH as well. If you if you get a chance to buy it around 3,300 or $3,200 region, I think you should absolutely be doing it. Somebody asked about the analysis on ETH. I had this full write up being shared in Discord. So please make sure to join Discord, and you would have a complete idea, about the complete update on ETH. Okay, so this first of all, just to give you an idea on that, this first of all is a very strong support in my opinion. For example, if you would look on the daily time frame chart, I was pointing out to the fact, somebody asked me earlier that, is it possible that ETH would go down to 3,300, 3,400? At that time, it was trading at around 3,700, 3,800. Now, obviously looking at the imbalance, you would say that okay, this is a likely situation, but you can do the best possible analysis, based on the information that you have. But you cannot say that okay, price would go back to this spot, or it should be going back to this spot. I pointed out in my write-up also, I pointed out in my update also, that if you get a chance to buy Ethereum at 3,300 to 3,200 region, you should absolutely be doing it, because first of all, it's a very strong daily support. The second reason is that if you would draw the fib levels, for example, this swing low, this anchor point to this anchor point, you would realize that okay, 61%, 70.5% fib levels, they are perfectly aligned in this region. And if you would look at some of the dynamic lines, for example, if you would look at the average of 100 period exponential moving averages on all these different time frames, daily, 12 hour, 4 hours, this is an indicator that I developed myself. You would realize that it's a very powerful indicator, by the way. You would realize that it's perfectly aligned in this region, in this area right here. And if you would look at some of the other dynamic lines, for example, some higher time frame EMAs, if you would look at the average of 200 period exponential moving average and yearly VWAP, it's also perfectly aligned in this spot. So a lot many dynamic lines, a lot many confluences, they are pointing out that there lies a very strong support in this region. Now the real question is that, is it likely that price would go back and visit this area? Now you can say that it is extremely likely, because we are breaking below this 4 hours. We have simply just broken below this 4 hour support. And secondly, if you would look at the imbalance as well, you would say that price generally tends to fill these imbalances. Okay, it's not something that you would say is mandatory, it's not something that is necessary, but a lot many times it has been noticed, it has been seen that price generally tends to return back to these spots. So once again, the 50% level, it's going to play an important role. For example, if you would draw if you would find out if you try to find out the imbalance or the fair value gap in this situation, once again, the 50% level, it's going to be at around 3,384. Okay, 3,384. So once again, all these different confluences, they're pointing out that price, if it returns back to this area, it's going to be acting as a very strong support. So I think if you get a chance to buy ETH, in comparison to BTC, if you get a chance to buy ETH at 3,300, 3,400, you should ideally be doing it. Can you do a more in-depth explanation on BTC dominance? Can you share some macro thoughts at the moment about DYX and CPI? Okay, so there are two questions, two very important ones. The first one is about dollar currency index, and the second one is about the BTC dominance. Okay, so first of all, let's talk about Bitcoin dominance. The market capitalization of BTC, because this is something that has been a pain in us, for the majority of the people, because the altcoins, they're not really performing good. I myself have a long position. I've got a long position open on Ape also. It's a little bit down in the moment, and once again, thanks to Bitcoin dominance, that the majority of the altcoins, they're getting hammered. Okay, so talking about the Bitcoin dominance, although I make sure to regularly share the updates on USDT dominance and BTC dominance as well, and that these are probably the only two indices that I'm actually looking at. A lot many people are looking at the some of the other indices also, but for me, the price action for BTC, the price action for the Bitcoin dominance, and finally the price action for USDT dominance, the market capitalization for USDT dominance. These are the three most important charts that you should be looking at. Now, talking about BTC dominance, you can see that, and for those of you who don't know, USDT dominance or the market capitalization of USDT, it's simply just an inverse correlation with BTC. But with Bitcoin dominance, it's not really an inverse correlation, like not really a negative correlation or positive correlation. In my opinion, they simply just move independently, to much extent. So in this situation, it's simply just the market capitalization of BTC, the market capitalization of Bitcoin is simply a metric that is telling you that how much capital is flowing into Bitcoin at the moment. Obviously, if the if the value of BTC.D it's going down, then this would mean that capital is flowing out of BTC. But more importantly, where exactly that capital is flowing into. Is it flowing into the rest of the altcoins? It's simply, or is it simply just flowing into USDT? That's a very important factor. Now, the reason the altcoins they're not really performing good, and BTC had a drop from 71,000 down to maybe 68,000, 67,000, and lot many altcoins they literally just suffered a lot. And the reason for this was because at the time the BTC was dropping, the Bitcoin dominance it was going down. Okay, sorry, the Bitcoin dominance it was going up. Now, what actually this signifies is that the price for Bitcoin it's going down, but the interest of the investors in BTC it's simply just going up, because a lot many people, a lot many investors they might be thinking that probably this is a good spot to buy into BTC, and that's why even though the price of BTC, even though when the price of BTC goes down, the Bitcoin dominance it could simply just go up or it could go down as well. But in this situation, the price was going down, but at the same time, the BTC dominance it was going up, and this would naturally mean that the capital, the in one way, the altcoins they are suffering, the altcoins they are bleeding simply because the general market conditions they are not good. The price for BTC it's going down. Okay, this is the one reason that the majority of the altcoins they are suffering. But more importantly, the Bitcoin dominance it's also going up. With the price going down, the BTC dominance is going up, which means that although the general market conditions they are not good, but at the same time, the capital instead of flowing into any of the rest of the altcoins, it's simply just flowing into BTC, which means that obviously a lot many people they might be taking their position, they might be closing their positions on altcoins, they might be rotating their capital from altcoins back into BTC, and that's why the dominance is going up, and at the same time the altcoins they're bleeding a lot, and that's why a lot many people they are always confused that even at sometimes BTC literally just drops $1,500, $2,000, and altcoins they just drop like 20%, 15%, sometimes even more as well. And BTC dominance, that's a major culprit. That's the major thing. Major chart that you should always be pointing, paying attention to. That you should always be looking at, because dominance it plays a major role. Market capitalization it's always playing a major role in this situation. Just 2 days ago, I had given these two levels, the 55.58% level and then 55.83% levels, and that's where, in my opinion, the dominance was going to have a rejection. The first rejection already happened, the second one also, then there was this third rejection also. It's not really looking good, because I just pointed out to you at the very beginning of the live stream also that whenever price is hitting into a level again and again, but at the same time the retracements they're getting smaller. For example, in this situation you can see that price got a rejection, but this was a massive rejection, this was a big rejection. The second time the price went back to this level, there was a very small rejection. The third time the price gets back to this level, there was once again a very small rejection. So you can see that the rejections or the retracements are getting smaller and smaller and smaller. Now this has nothing to do with BTC. BTC obviously has an independent price action, but it would have a massive impact on what exactly is going to happening with the altcoins. If price breaks above these levels, obviously you would see a major, I would say, a bloodbath on the majority of the altcoins, especially if the price of BTC keeps going down. Because even if price of BTC starts going up and dominance also is going up, then in that case, the altcoins they are not going to perform literally too bad, because they would be relief from one side that the general market conditions they are literally just green. But if the price of Bitcoin keeps going down, the inflation numbers they're bad, and at the same time the dominance keeps going up, then that's literally the recipe for disaster, for the rest of the altcoins. Okay, so that's it about the dominance update as well. You should be paying attention to these two levels. If we break past these levels, then it's not going to look good, for the altcoins. You mean sell your houses to buy ETH at 3,300, 3,400? Uh, you can actually do that, because hardly you would see a lot many important confluences on such higher time frames aligning, in one direction at at a similar spot. For example, I just pointed out to you that there's a strong daily support. The imbalance is right there, the 50% of imbalance. Then obviously you would have an order block also on the higher time frames. Then you would have a few other important things like, some of the dynamic lines, some higher time frame EMAs. You have the Fibonacci levels also. So that's actually a lot many confluences in one place. Obviously, there is never 100% probability that you would win into a setup, but in my opinion, there is at least 80 to 90% chances that ETH would have a major bounce happening from 3,300, 3,400, 3,200 levels. So these levels, they're going to be extremely important. This daily support, this daily range, is extremely important for ETH in my opinion, especially when the ETF, it has already been approved. There is nothing much to lose in terms of ETH. The ETF, it has already been approved, so you cannot really say that I'm not going to buy into ETH because what would happen if the ETF gets rejected. But that's not really going to happen because we are already done with that part. If we break through the supply zone of BTC.D, then where we are headed next? Okay, obviously, that depends on making some of the other, forecast. You would have to be looking at the, next historical levels. For example, let's say we're looking at the daily time frame chart. Okay, you would have to look at the historical resistance areas. The Obviously the last all-time high has been at 57% level, but one way that we can actually predict where the dominance might be going to is simply by making use of the fib levels. But I would point out to this 50% supply zone as well. Now, once again, this is something that is absolutely specific to me. I have from time to time mentioned during my live streams also that how do I draw the 50% demand supply zone. This is a strategy that I developed myself. Okay, so there is a greater possibility. This first rejection actually happened from 70.5% fib level. For example, if you would draw Fibonacci from this swing high to this swing low, you would notice that the first rejection, it was simply just at 70.50 fib level. But if we break past this area, obviously, there is a greater possibility that we would be getting rejected off this level. For example, if you would draw, once again, if you would draw fib levels from this swing high to this swing low, you would notice that we're literally once again sitting at 70.5, 78.6% fib levels. If we break past this level, then the first major rejection, in my opinion, and there are once again 70 to 80% chances that it might be happening, is going to be at around 56%, 56% level, because that's where the 50% of supply zone is. I'm not really going to point out the next few levels where the dominance might be going to, but because in my opinion, this level, it might, price might be finding it a little bit hard to break past this level, because this is daily time frame chart. We are looking at this massive wick right here, and this 50% supply zone obviously is going to give some sort of rejection. So if you break past this level, it's definitely going to be at around a massive rejection at around 56.62% levels. Okay, guys, I guess that's it for today. Once again, thank you so much for joining in. I hope you guys enjoyed the live stream. Make sure to join the Discord as well, and I would be announcing the winner of the giveaways also, but I would be doing that in Discord. Okay, as soon as I end the live stream. I cannot really do that. I cannot really do that here because I don't really have an idea that how many of you are in Discord. So yeah, I will be announcing the winner of the giveaway on Discord. Once again, thank you so much for joining in. Take care and have a great week ahead. Thank you. Thank you all.